This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial endowment expert, Harold Siegel. We're taping our show on October 24th, 2014. Our time is 8:44 Mountain. Radio show runs on your favorite radio stations. 6:30 CHED in Edmonton, Sunday afternoon at 3. The shows are archived and streaming on Harold's websites, HESradio.com and rarecoloreddiamonds.com. We have a podcast through iTunes. Type in the World Financial Report on Radio. You will find the podcast there. Subscribe to it. We are portable. We go anywhere you do. It was a very tough week for us here in Canada. A lot of people say that we lost our innocence. Shooting, obviously, in Ottawa and in Quebec. And with Remembrance Day coming up here in a few weeks, it will have, it always has incredible meaning, but even more meaning this year. And in the world, economically and geopolitically, it was another rather interesting week. We had big moves up and down in the stock market. The ECB, this coming out this morning as we tape, set to fail 25 lenders in a bank review. They took a look at their balance sheet. Would they survive in a crisis? 25 lenders won't be able to. They will have to come up with more money. The UK, their economic growth has slowed to 0.7% in the third quarter. You have almost negative growth 2 quarters in a row. You are in recession. Also, the ECB buying $1 billion in covered bonds to fight deflation. And I would really encourage you to get our free weekly newsletter through Harold. Connect with Harold at rarecoloreddiamonds.com or 1-800-432-1022 because we have quite a few stories in our free weekly newsletter this week about deflation. In fact, deflation is a major concern in Sweden, and it looks like here in the next week or so they will be lowering interest rates to try and stoke inflation to fight deflation. But that is a major concern right now in the world. Also, there was a patient that tested positive for Ebola in New York City. And the Ebola situation is very frightening because it just seems to be spreading. Also this week, Christie's Auction House had an auction. We'll talk about the results later in the show. And Harold was mentioning that he received a red diamond, the rarest of the rare. We'll talk about that too. And our featured diamond this week is an extremely rare 1.03 carat pear-cut fancy orange pink diamond. We'll talk about that a little later in the show. Harold, obviously it's your birthday weekend. You celebrating a birthday here tomorrow as we tape on Friday. And we wish you a happy birthday weekend. But here in Canada, obviously, it was a somber week due to what happened in Ottawa and Quebec.
You better believe it. I think the whole world was reeling from that, Randy. Canada's such a peaceful nation type of thing, and, you know, it just goes to show how vulnerable, you know, everybody is to these terrorist attacks. It was a horrible situation, and we were very, very saddened by it. Obviously, you know, by the death of the Canadian at the Parliament buildings. It was very, very sad, and all of us were very upset by that. All in all, the markets reacted to that situation, but then, you know, traded on their merry way. All in all, the gold market today, as we're taping the show on Friday, is trading at $12.32, basically down 80 cents on the day. Silver's at $17.33. Basically, we are seeing that gold should retest the 1180 level. 1180 is a very heavy support level for gold, and 1180 is the price that gold came down to in 2011 when it dropped from 1900 down to 1180, and that's where the market had stopped. Same thing with silver. Silver had come down from 50, which is a high that it hit in 2011, and came down to around 1650, which is what we hit a few weeks ago when the markets both came down and tested those support levels. So at this point here, I believe that we will retest the 1180 level. If it holds, It's called a double bottom, and it could rebound off of that, but we need some bullish news. We need some reason, to want to buy gold at this particular point. Same situation with silver. Silver could come down and double test the 1650 level, and if that level holds, it should be a springboard and the market could, start to move off of that. Again, it's called a double bottom. However, if the news remains bearish on gold and silver at this particular point, the 1180 level will not hold in gold, and ultimately it could come back to $1,000. I don't want to see that happen. However, if it does, it'll be a tremendous buying opportunity. Same situation with silver. If the 1650 level holds, that's great. If it doesn't, we're looking at possibly, 1450 to 1480 in silver, and that could basically be the bottom of this market. Now, again, I'm not assuring you that it's going to break the 1180 level in gold and 1650 level in silver, but it is very possible. The other situation that we're looking at is oil. The fact is that oil prices have dropped from $110 that it was at about 4 months ago to where we're testing the $80 level right now. The $80 level in oil is a very key level, meaning that if $80 is broken, and we're very, very close to that today, or at 80.63, it's down $1.46. There's sell orders below the $80 level that could bring oil down to $75. And at $75, there's going to be issues. In actual fact, there's issues at $80 because Russia is in big trouble with lower oil prices. The ruble is plummeting, and because of the sanctions and low oil prices. So basically, oil getting down to this level is killing Russia, because Russia is one of the biggest producers of oil in the world, and at $80 they're losing money. Venezuela is in a similar situation. They're hurting because of extremely high inflation, sanctions against them, and extremely low oil prices. In fact, Venezuela needs oil prices to get back almost to $200 in order for them to be profitable. The Saudis are hurting on low oil prices also. Now, OPEC has the capabilities of dropping oil prices well below $75 if they want to. And that would hurt several countries financially. It would hurt Canada, it would hurt the United States, and it would hurt other oil-producing nations. And don't think that is so far-fetched that OPEC would do this. OPEC needs oil prices well above $90 in order for it to be profitable. Obviously, at $80 it's not, and soon they'll stop pumping. And by stopping pumping, what they're going to do is create a shortage in the oil market that will bring oil prices back with a vengeance. But that's not going to happen so soon. What I've seen OPEC do in the past is drop oil prices so it hurts all these producing nations like the United States and Canada that are producing oil at slightly lower prices. But basically, the oil sands in Alberta, you need oil prices at about $85 to $90 in order for it to be profitable. And basically, the shale situation in the Dakotas is very similar. Now, there are rumors out there that the U.S. is purposely bringing down oil prices to hurt Russia even further. However, by bringing oil prices down to the level that they're at right now, and it's at a key level at $80, again, there's sell orders in the futures market for oil below 80, it could easily fall to $75 by next week. And that's very, very possible. A similar situation is happening in gold. The fact is that with gold prices as low as they are at this point and silver, soon the mines will stop producing because they're not going to continue to produce gold at a loss. In actual fact, not a lot of gold is being produced at this particular point. Number one, demand is low, but number two, you've got the Ebola situation going on in South Africa. In fact, a lot of the Ebola started in some of these gold mines actually in South Africa, which is one of the reasons that we have not brought our gold in yet to the country. It's too dangerous of a situation, and we're still not convinced that gold is going higher at this particular point. We believe that gold has got to make one more downward move before it goes substantially higher, and I think the timing is going to work out for us purposely. We have got a great deal with some mines in South Africa because of my partners whose father was in the mining business for many, many years. He's got tremendous contacts in the gold mining business, and basically he has set us up with the proper people. Now, we haven't brought our gold in yet. Number one, we're not ready to sell it yet because we think prices are going lower and we want our clients to have a great deal. But on top of that, the fact is that we're concerned about bringing any gold in from South Africa with the Ebola scare and all that. So basically, the timing is not right to buy it yet. However, we have worked out our deal, and we are going to be able to bring to our clients when the time is right to do so, physical gold at spot prices with no commissions. That's what our goal is. That's what we've accomplished, and we will be able to bring that to you at the right time. But again, we certainly want to see if the 1180 level holds in gold, and if it does, then we'll make our arrangements. If it doesn't, again, we think that we're going to be able to buy gold at around $1,000 an ounce. Now, again, gold is bearish at this particular point because of 3 years of being in a bear market that was caused by the governments and the exchanges doing what they did to the gold market. To remind you what had happened, in 2011 when gold hit $1,920, it was ridiculously bullish. I mean, everybody thought that not only was gold going to break 2,000, but it was going to 5,000. And basically what happened is because there were so many investors buying gold, both in the futures market and in the ETF market, there was not enough gold in the warehouses to back up the futures contracts and the ETFs. You see, in the futures market and in an exchange-traded fund, the rules are very firm and very simple. For every ounce of gold that is sold, there has to be an ounce of gold to match that in the warehouses in New York where they store the gold and silver for these ETFs. Well, it had gotten to a point to where so much gold and silver was purchased on these paper contracts that there was not enough gold in the world to back up all these contracts. And what they obviously did is they brought down the market purposely. They forced people to sell out, and the way that they did that was by making it so expensive to buy these ETFs and these futures contracts that basically it caused speculators to sell, and that's exactly the way the government got gold to go down, and the reason for it was because they were in violation of the commodity laws because there was not enough gold and silver in the warehouses to back up these futures contracts. Consequently, what happened, they brought the price of gold down. All of a sudden, they started to rally the stock market. People lost interest in gold at that particular point and started investing in other things. Now we've been 3 years into this bear market in gold. However, if you look at the overall scenario, gold went from $250 all the way up to $1,900 in a massive bull market. Came down to $1,180, which was about a 40% retracement, and in that type of market, a 50% retracement in a market like gold is not unusual. In actual fact, gold and silver are very volatile markets, as is the stock market at this point. And I've seen many times in my career that gold has made a 50% retracement in a massive bull market like we have. Now, the fundamentals for gold, in my opinion, are very good. There's a shortage of gold. The mines are not producing it now because the price is too low. The fact is that we're going through a period of possible deflation, but as Randy mentioned at the beginning of the show, that countries like Sweden are looking at lowering interest rates to raise inflation. So basically, there's a lot of scenarios, and by the way, lower oil prices where it may seem that it's good for the economy, it really isn't, because it's going to put a lot of businesses into a bad situation, and just look what it's going to do to stocks like Exxon and Mobil and the major oil companies. So again, lower oil prices, you're going to see some fireworks in that market coming forward, because there's no way in the world that Saudi Arabia and OPEC is going to let oil prices get down much lower than where they are. They may bring prices down to $75 or even $70 to cause a problem in the market where OPEC will stop producing. That I see possibly happening in the very near future. So again, I still believe very, very strongly that the fundamentals for gold and silver are still there. We've been in a 3-year bear market, but we were in a 10 or 11-year bull market. And we saw prices in gold go from $250 to $1,900, and it would have gone substantially higher than that if the government and the exchanges didn't do what they had to do at that particular point. Now, Would we be giving up on gold at this particular point? I see absolutely no reason in the world to even consider something like that. Gold has not made a 50% retracement. The reason I said the gold could come down to around the 1,000 level would make it at a 50% retracement, but the fact that very little gold is being produced at this point. We know that China and India are still buying gold like it's going out of style. And then on top of that, because of the low price and what's happening in South Africa, they're not producing gold in the mines at this particular point, and they're not shipping it. So I think that's a perfect scenario for extremely high prices coming in precious metals. On top of that, one of the major reasons to buy gold and to invest in gold is a hedge against inflation, and we certainly believe that not at this particular point, because we're dealing with deflation, which is another reason why gold and silver could fall a little bit further, but we are going to be dealing with inflation moving forward because, number one, of the tremendous amount of U.S. dollars that have been printed, and the fact that the U.S. dollar will have to fall again. There is no doubt about that. There are so many U.S. dollars out there, and they printed so many dollars that eventually we are going to deal with inflation and a very weak U.S. currency, which eventually will push the price of gold back over 2,000 and probably substantially higher from there. So if we get gold down to 1180 and it holds at that level, I would recommend buying physical gold at that point, and only physical gold. Don't let anybody hold your gold for you, and definitely do not leverage your gold. You know, I've mentioned this ever since we've been on the show. You know, we had a run in gold where gold really made a huge move, and a lot of people made a lot of money on our advice. But also what a lot of people did was they got a little bit greedy, and they got a little bit into speculation, and they started leveraging their positions. And that's the worst thing you can do in a market as volatile as gold and silver. So basically our recommendation has always been to buy physical gold and to own it and hold it yourself, and that has not changed. The fact is that there will be a time within the foreseeable near future that gold and silver will literally explode in price, just like it did in 1980 when a very similar situation happened to what's happening now. Because gold had gone all the way from $35 to $125 to $250. And then at $250 gold, it fell all the way back down to $125. You had that 50% retracement, and then gold took off and went all the way up to $850. So when you least expect this to happen, it is going to happen. And if you don't own gold physically or silver, you're going to then start to buy in a very volatile market where the spreads are big and the prices are higher. You don't want to do that. If you believe that gold is a hedge against all that's bad that could happen, then you just want to own it physically, keep it on you, bury it in your backyard, put it in your personal safe, or hide it in a bank. But the bottom line is you need to own these type of assets, because if you look at what's happening in the alternative asset market, when I talk alternative assets, I'm talking assets like gold, like diamonds, like art, like classic cars, like all that. Those are the markets that are much, much safer than the paper asset markets, and those are the ones that are going to make the most amount of money. Look at what Bill Gross says about stamps. He says at a 2010 auction, bond guru Bill Gross said rare stamps were better than the stock market. Gross, who's obviously very wealthy, has reportedly spent up to $100 million investing in stamps, and he said that the market rose 74% in 6 years following the Great Recession. Guns and ammo, forget about that. They've gone up 225% in 10 years. You're talking about Chinese ceramics have gone up tremendously, 50% in the last 5 years. You're talking about wine that has absolutely skyrocketed. You're talking about memorabilia. Do you realize that Wayne Gretzky game-worn jersey was $50,000, and then they resold for $200,000. Bobby Orr's jersey, who, by the way, I played hockey with when I was a kid, Bobby Orr jersey that sold in 1996 for $30,000, sold again 5 years later for $170,000. Vintage cars have skyrocketed 456% in the last 10 years. Wristwatches have skyrocketed, Patek Philippe's and those type of diamonds, they're just saying is one of the best investments in the world. The big investment play in diamonds is that paper currencies are getting significantly debased almost universally. There's not another non-paper currency with which you can move your entire wealth into your pocket, and that doesn't exist in any other market. Rare coins have skyrocketed 220%. Autographs of certain people have gone up in art. I've been dealing in the art market. It's unbelievable what's happening in art. I'm showing some Monets and I'm showing a Warhol painting worth $110 million at this point. So this is what's happening in the alternative asset market. You know, the paper asset market's going to get hammered. There's no doubt about that. There's no doubt within the foreseeable near future that we're going to see a massive drop in paper assets, stocks, and all that type of situation. You're seeing it now. But the bottom line is alternative assets like hard assets, gold, diamonds, all the things that I mentioned is a great place to put your money. And that's where we see things at this point, Randy.
Connect with Harold at rarecoloreddiamonds.com. Speak with Harold about investing in hard assets. Call him at 1-800-432-1022. 1-800-432-1022 and connect with Harold at rarecoloreddiamonds.com. Get our free weekly newsletter. It's the companion to our radio show. And in our newsletter this week, we have a chart of the week. Americans' gloom marches into second decade, according to a new Wall Street Journal NBC News poll released this week. When 1,000 potential voters were asked whether they think the United States is on the right track or wrong track, 65% of them said the country had taken a wrong turn. And only 25% the United States believe is on the right path. The only time the public has felt worse was in October of 2008 during the first deep spasms of the recession. Then 78% said the nation was on the wrong track, and only 12% felt good about the country's direction. That poll in the United States. Take a look at it in our free weekly newsletter. Get it from Harold. RareColoredDiamonds.com is the website. Telephone number 1-800-432-1022. Harold touched on it. Chinese and Indian gold buyers are back in the market in a big way, buying gold and silver. One of the stories we touched on last week was the Swiss gold referendum, where early polls put the Swiss gold referendum suggesting yes, saying yes, at an early lead of 45%. That means that you would have, in Switzerland, they would have to back their dollar with gold and have to have, I believe it was 20% of their currency in gold. And the people of Switzerland, early polls, the election comes up November the 30th, the referendum, and yes is leading at 45%. And that could have huge ramifications for the hard asset market, in particular gold. We are going to come back and talk about diamonds. Christie's had an auction this week, some outstanding diamond results. Harold just told us about a red diamond that has come into his possession. We'll talk about that, too, as the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping the show on Friday, October 24th. Our time is 9:10 in the morning. Radio show runs on your favorite radio stations, 6:30 CHED in Edmonton, Sundays at 3 in the afternoon. The shows are archived, streaming live on Harold's two websites, HESradio.com, rarecoloreddiamonds.com. We have a podcast through iTunes. And all you need to do, go to iTunes, type in the World Financial Report on Radio. You'll see the podcast there. You can listen to them. You can obviously subscribe, transfer them to your portable device. Our radio show goes anywhere you do. And we're there with you, not only via the radio, but with our free weekly newsletters. Get our free weekly newsletter, packed full of information. You can go through it probably in about 5 minutes on your smartphone, your iPad, whatever, and take no time at all to go through it. You're going to be fully informed of what happened during the week, politically and geopolitically and also economically. And yet, at the same time, if you want, you can spend hours. We have Our charts of the week, information on diamonds, gold, and silver, quotes. It's packed full of good information. If you want to see what Harold Siegel and I are reading on a weekly basis, and you want to see the stories that we talk about, get our free weekly newsletter, get your name on the list. Connect with Harold at rarecoloreddiamonds.com, rarecoloreddiamonds.com, or call 1-800-432-1022. That's 1-800-432-1022. In our newsletter this week and online at rarecoloreddiamonds.com, our featured diamond of the week, it is stunning. A diamond that you will really not find anywhere else. An extremely rare 1.03 carat pear-cut fancy orange pink diamond ring. And this is amazing. You will see it online, rarecoloreddiamonds.com. Click on featured diamond of the week. We also have in our newsletter a picture of the diamond ring. It is stunning. As we talked about before, Harold was in Chicago. RareColoredDiamonds.com and HSFineAuctions.com were in Chicago for the Perfect Pink Night benefit. That was October the 15th, and we have some pictures in our newsletter. A great picture with Harriet Siegel, Harold's wife, also along with them, Nancy G. Brinker, founder and chair, global strategy of Susan G. Komen. She was the one who started the Susan G. Komen Breast Cancer Foundation, and a picture of Harold there as well. They lit up a bridge in Chicago. We have a picture of that. And it was a great night because Harold was offering diamonds, and those diamonds, portion of the proceeds went to breast cancer. Obviously, October is Breast Cancer Awareness Month, and you can take a look at some of the pictures that we have. There's a picture of Harold's son, Jonathan, there, and as well a picture of Harold's partner, Jose. It's all in our newsletter. As well this week, Christie's Important Jewel Sale, October 22nd, 2014, New York City. A 101-carat diamond sold for $5 million. After record-breaking auction prices in recent years for fancy colored diamonds, it appears the colorless diamonds are now nudging their way back into the spotlight. 7 of the top 10 lots at Christie's held on Wednesday featured colorless diamonds, with 5 of these items selling for more than $1 million. The top lot in the sale was a 101.36-carat cushion-cut L-color VS2 diamond that sold for $4.98 million, or $49,100 per carat. It was absolutely gorgeous. You can take a look at it. It is in our newsletter. And Harold, we do have, and we'll let you talk here, but we do have auction results for colored diamonds as well. We can send those out. And once again, we're finding that the diamonds that are the smaller diamonds, the less expensive investment diamonds, when it comes to auctions, they're being put up for auction, and they are doing better than the bigger diamonds when it comes to price appreciation and beating estimates.
Well, that's exactly what we wanted to see, and that's exactly what's happening. So there is definitely a market for smaller diamonds. You know, Christie's and Sotheby's are obviously famous for selling amazing pieces, multi-million-dollar pieces. But if you look at the auction results, again, they certainly prove that a lot of the lesser expensive diamonds are the ones that go up the most and have the biggest percentage of return. And that's what we're building. You know, our auction business is 3 years old, and we're building it and building it. That's one of the major reasons we're also involved with the charity is because we get introduced to very high net worth clients around the world that can afford to buy our diamonds. So that's what we're building. Again, our auction business, we're just setting a date for sometime in November. You know, with the Canadian dollar being as weak as it is, you know, it certainly hurts our Canadian clients a little bit. But what we're working with at this particular point and what we did last week, and we're going to allow it again this week, is to be able to purchase our diamonds in Canadian dollars. You know, I'm Canadian myself, and a lot of my business is in Canada. So basically what we did, because I had some very, very large orders going into Canada, is we hedged the American-Canadian dollar spread. And we did it in a very large amount because we had some large orders going there. So basically what I'm able to do is to be able to help our Canadian clients, and instead of paying for our diamonds in American money, which is 12% higher than the Canadian dollar, we're going to allow our Canadian clients to be able to pay for their diamonds in Canadian money. It's going to save you 12%, and we're still going to pay the shipping and the insurance and all that for you. So, again, what we're trying to do is to try to help our clients get into the right markets at the right time and make it financially as easy for you as possible. So, again, we made some decent money on the exchange between the American and Canadian dollar. We're willing to pass that savings on to our clients in Canada. So when you look at our diamonds, which are priced in U.S. dollars, we'll be able to sell you whichever diamonds you would like, but charge you only Canadian money, which is going to save you 12%. Same as we're doing with gold. When you buy physical gold through my company, you're going to be able to buy gold with no commissions and a spot price. So at this particular point, while the economy is tough and the currency markets are hurting us, we're here to help, and that's what we're able to do, is to be able to save you 12% on the currency exchange and to be able to still give you amazing prices on diamonds, and that's what we're willing and able to do at this particular point. You know, I mentioned also at the beginning of the show, and I said to Randy, as many years that I've been in business 35 years, when it comes to red diamonds are the rarest diamonds. Most people don't know that diamonds come in red. Most people have never, ever seen a red diamond. They're so ridiculously rare, and they're in the millions of dollars per carat. Now, most red diamonds are not even graded on their clarity because their color is so important. So the odd time that a red diamond is graded, when they are graded by GIA, Gemological Institute of America, they're either graded on their color only, or they're graded to where most red diamonds would come out as an SI1 or as an SI2. Very, very seldom will you ever get a red diamond that is graded as high as a VS1 or a VS2. Now, I have a red diamond that I just purchased, and the diamond shocked me because it was graded as a VVS1. The only clarity higher than that is internally flawless, and we have never, ever seen a red diamond that came close to flawless. In fact, people that know about red diamonds think that the mystery of a red diamond and a pink diamond comes from the impurities in the diamond that give it, you know, that tremendous color, that really deep, beautiful red. If you put a red diamond beside a red ruby, for example, it would take your breath away. You would know immediately that this is something special. And very few people have ever seen a red diamond, heard of a red diamond, or ever had an opportunity to own a red diamond. I happen to own 10 of them, and this one that I just bought, again, shocked me, one, because of the color. It's a fancy purplish red, but on top of that, it's graded as a VVS1 clarity by the Gemological Institute of America, and in my entire career, and I've asked a few friends that are in the diamond business, they have never, ever seen a red diamond graded as a VVS1. We are able to sell this diamond. It's just over a third of a carat. It's absolutely amazing. But the diamond we would sell at $500,000, 500,000 Canadian, and that would save you actually about $60,000 just in the currency exchange alone. But to own a red diamond in and itself is a real coup. To own a red diamond with the clarity of an SI1, an SI2, or a VS1 is extremely rare. To own this particular diamond that's a VVS1 clarity is nearly impossible. Again, in my 35 years in business, I've never, ever seen one. So what's happening in the diamond market right now is almost unprecedented. It's a time where people are very nervous about the world economy. They're seeing what's happening with the currency markets all around the world. The markets are being manipulated in stocks. There's no doubt that the plunge protection team came into the stock market and righted the ship because the stock market was plummeting. And there was a good reason why the Dow was plummeting. And then all of a sudden it's back up, 200-300 points in a day. It's almost laughable. It's almost a joke that they think that people don't really understand. And the people that are trading stocks obviously don't care what the reason why stocks are going up, just as long as they're making their money back. So, again, at this particular point, we believe that the hard asset, the alternative asset market, is certainly a place to put some serious money. It's much safer. You're going to do way better in the long term. And for those of us who remember 1986, 1999, 2008 and 9, you realize that we're coming very close again to another marketplace where the markets are going to plummet. And if you don't get out at the right time, you're going to end up losing your money again like you did on all those years. Put some of that money into a hard asset that will do extremely well for you. 10 years ago, you could have bought a 2-carat vivid Argyle pink diamond for $350,000. Today, if you could ever possibly get one, they're $3 to $4 million. What's happening with blue diamonds has been unbelievable. In the last 10 years, vivid blue diamonds have gone from $200,000 a carat to $2 million a carat. I mentioned that 50 years ago, my wife's girlfriend's grandmother bought a pink diamond for $50,000. Today, that diamond is worth $5 million. So that's what happens in these markets. I read earlier to you what's happening in the stamp market, to a point that a guy like Bill Gross will put $100 million into that market. That a vivid pink diamond sold last week for $17 million. If people are putting that type of money into these type of assets, it makes sense for them to do it. It makes sense for us to do it. Now, let's face it, most people don't have $17 million to put into a diamond or that type of thing. But for $20,000, you can buy a yellow flawless diamond that back in 1980 was $500 and today is $20,000. A pink diamond today that you could buy for $50,000 to $100,000 in 10 years from now will probably be 10 times that price because there won't be any more pink diamonds left. Now, we built H. Siegel Fine Auctions as a secondary market to resell our diamonds down the road. I've got to, make this very clear. If you bought a diamond and you're not holding it for at least 10 years, you're not going to make anywhere close to the money that you should, and you're defeating the purpose of why you bought it. You bought a diamond for portable private wealth, for the type of asset that never loses its value, for an asset that could, you could travel with in your pocket, and for over the longer term, you're going to make a lot of money with. But if you bought a diamond and plan on selling it 2-3 years down the road, you're just not going to make any money. You just basically are ruining a tremendous asset that you're supposed to hold on to and put away in the safety deposit box for the next 10 or 15 years. That's where you're going to make your money, not trying to sell it after 2 or 3 years. We're building our auction business. It's a business in progress, and basically what we are doing is we are working with charities and higher net worth clients to build this business, to build it to a point to when our clients are ready to sell their diamonds at auction, that we have clients all over the world that will buy these diamonds because of currency situations and the fact, that they have the money in which to buy them. So basically that's what we're doing with our auction business. If you're in the diamond business right now, if you own diamonds and you've only owned these diamonds for 2, 3, 4, 5 years, put them away. Put them away for the kids and the grandkids and yourself for retirement. Don't look to sell them just to get your money back on them, because you defeated the purpose of owning an amazing asset that over the long term will make you and your family an awful lot of money. Again, 50 years ago, you could have bought a pink diamond, a 5-carat pink diamond for $50,000. Today, that diamond's worth $5 million. That's what we're talking about in the diamond business, and diamonds as an asset. The same thing with classic cars. You buy a classic car, 10 years from now, you're going to get a ton of money back for it if you bought the right car. But if you sell it a year or 2 years after you bought it, you're just not going to make the money on it. So my suggestion is to definitely get into alternative assets. That's where the biggest money is being invested. That's where most of the money is going to be made, and that's where the safest investments are. But you got to give them time in which to go up in value, and that's where our auction business will come in. We're building that business. That's why we're one of the corporate partners for Susan G. Komen, and we're going to bring other auctions to you this year from other charities like the Girl Scouts of America and the Heart Foundation. And that's how we build this auction business, and it takes time in which to do so. So, again, Randy, at this point, it was a great newsletter this week, loaded with very important information. You got Ebola going on. You've got so much happening in the world right now that is concerning. You've got the potential of deflation and the potential of currency devaluation. So, again, it's a very confusing and volatile time. You see it almost every day in the stock market. But the bottom line is there are assets that are very safe, that are longer-term investments that you need to put away for your future. And again, the newsletter this week was just packed with great information about everything happening in the world, and I love the diamond section this week. It really showed the auction results and what's happening in the diamond and alternative asset business.
There's a quote in our newsletter from Philip Manduka. He's a fund manager who has invested in diamonds, and Harold touched on it. The big investment play in diamonds is that paper currencies are getting significantly debased almost universally. There is not another non-paper currency in which you can move your entire wealth in your pocket, external to government or banking system adversity. And he's talking about investing in diamonds. And I would highly recommend you take a look at Harold's website for diamonds, rarecoloreddiamonds.com. rarecoloreddiamonds.com. You can speak personally and privately with Harold about investing in diamonds at 1-800-432-1022 and get your name on the list for our free weekly newsletter. This week's featured diamond is an extremely rare 1.03 carat paracut fancy orange pink diamond. It is absolutely stunning. Take a look at it online at rarecoloreddiamonds.com or in our free weekly newsletter. Let's continue and let's run down a few of the auction results from Christie's this week. I promised that we would do that and really point out to you how a lot of the big money being made is in the smaller diamonds, not the big diamonds, but the smaller diamonds. As an example, lot 91, a colored diamond and diamond two-stone ring. And this is a crossover design set with a modified pear-shaped fancy yellow diamond, and it also has, and this is a very beautiful diamond, a white diamond. Now, the estimate on it was $40,000 to $60,000. It sold for $100,000. It went for $40,000 more than estimated. Lot 127. You have a colored diamond and diamond ring set with a pear-shaped fancy brown diamond, and it's yellow brown, weighing 13.74 carats. And the estimate on it, $40,000 to $60,000. The price realized, $118,750. Major amount of money, obviously, that it went for beyond what had been originally asked. And we also have lot 122. This is a colored diamond and diamond ring by Graf, set with a modified cut-cornered rectangular cut fancy yellow diamond, weighing 8.58 carats. The estimate on it, $90,000 to $120,000. It sold for $173,000. Harold, once again, we're seeing the big diamonds. They're doing very, very well. We know that. We see it all the time, as was the case a few weeks ago when that massive diamond sold for close to $18 million. Yet it's the smaller diamonds, the investment diamonds that we offer, that are really stealing the show at auctions like Christie's had this week.
Loving it, Randy. Just absolutely loving it. That's exactly what we wanted to see happen, and that's exactly what is happening. In actual fact, it's been happening for quite a while now. The last 3 or 4 years that we've been bringing to you the auction results have shown that this trend is real, and it is happening at pretty well every auction. So, again, we're very enthused with what's happening in the diamond business. You know, the diamond business, 99% of it is primarily that diamonds are mined in a diamond mine. Most of them are white. They're sold to cutters and polishers who cut and polish these diamonds and sell them to the jewelry trade. That's what the diamond business is. Ours is a more specified part of the business. We're the investment aspect of the business. And again, we bring to you diamonds that have track records, diamonds that have done well over time and with proven results. What we did is we built a secondary market, H. Siegel Fine Auctions, to eventually sell our diamonds down the road, and that's what we're building as our major business. So, again, just bear with us on that, because, again, as we get bigger and bigger and we have more and more clients, especially worldwide clients where their currencies are stronger, it's certainly going to help build that business tremendously. If you own a diamond, and you've owned it for the last 3, 4, 5 years, just keep that diamond. Put it away for your future. Put it in a safety deposit box, and you're going to be shocked at what the returns are going to be. But again, if you buy a diamond for the short term, it's not a short-term investment. It's a long-term investment. It's always been that way. Same with stamps and classic cars and art and all that, because again, there's always commissions and cost of doing business that interfere with the overall profit, and that's why it's always been, number one, a longer-term investment, but number two, a hidden and private asset that can have tremendous benefits for you. So again, the auction results, Randy, were phenomenal, and with what's happening in the big diamond market is spectacular, but it's the smaller diamonds that are making the biggest returns.
And if you'd like to learn more about investing in nature's art, we're talking about diamonds. Speak with Harold Siegel, rarecoloreddiamonds.com. rarecoloreddiamonds.com. Connect with him personally and privately. His telephone number, 1-800-432-1022. Our featured diamond of the week is an extremely rare 1.03 carat paracut fancy orange pink diamond ring. It is a must-see online at rarecoloreddiamonds.com. The featured diamond of the week. We have it in our newsletter as well, and definitely get our newsletter. We'll send out the auction results from Christie's important jewel sale this week, and you can take a look at the auction results for yourself. But we can tell you that the auction results were spectacular for those that are investing in big diamonds or small diamonds. All the diamonds that are being auctioned, whether it be in Asia or in North America, are doing extremely, extremely well. And Harold, that's one of the great things about investing in diamonds, as we saw in some of the pictures we have in our newsletter. When you were in Chicago, a lot of people are wearing their investment. They wear the investment, and obviously it's wealth at the same time. And I know your wife, Harriet, had a stunningly beautiful diamond necklace on.
She's wearing a 100-carat diamond necklace. All the as soon as she walked down the stairs, all the media was there and taking pictures. My wife's a beautiful woman, and she wears it well. So basically, being in the diamond business, she is privy to wearing some pretty spectacular pieces. I have the last 8 pieces of Elizabeth Taylor's estate. On a few occasions, my wife's worn Elizabeth Taylor's necklaces, and they're just extremely beautiful and very, very valuable. So again, the diamond business is getting stronger and stronger. The auction results prove it. And the fact is, I think the best is by far yet to come. The more people get concerned about the world economy, the more they'll understand the importance of alternative assets, which are assets outside of the paper market, like stocks and bonds type of things. So, again, we're very enthused. Those results were tremendous, Randy. And, again, we're seeing it in the diamond market in general. It's gaining a lot of popularity.
One of the big notes of the week, the ECB, very concerned about deflation, and they are putting in 1 trillion euros in covered bonds to kickstart the European economy and to fight off deflation. And deflation, we have articles about it in our newsletter, and a story from The Economist, why the euro crisis is far over. Sweden's deflation nightmare. Also an article from Bloomberg, currency wars evolve with the goal of avoiding deflation. Currency wars are back, though this time the goal is to steal inflation, not growth. And that's what we're seeing. The United States dollar has been strong of late, but it's the cleanest dirty shirt of the lot. It's not a great currency to be in. Yet at the same time, everyone is debasing their currencies around the world. That's why we're into a currency war situation, and people concerned in Europe about deflation. Harold Siegel, we have about 15 seconds left here. Happy birthday weekend to you.
Thank you very, very much. I appreciate that very much, and I wish everybody a wonderful weekend and a very profitable day.
Connect with Harold at rarecoloreddiamonds.com, rarecoloreddiamonds.com, and you can speak with him personally and privately. Find out more about investing in hard assets, our featured diamond of the week, that rare red diamond that he now has for investment, 1-800-432-1022. That's it. Another edition of the World Financial Report on Radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.